Hey there, future moneymakers. You need to hear this if you're struggling with planning for retirement. Retirement might seem far away, but it's never too early to start planning. You want to enjoy those years without financial stress. This means saving enough money to support your lifestyle. A comfortable retirement requires careful planning and consistent savings. One of the most powerful tools for retirement savings is a 401k. This plan helps you build wealth over time. It offers tax advantages and potential employer contributions. Ignoring retirement savings can have serious consequences later. Don't wait. Take control of your future and start planning today. A 401k is a retirement savings plan offered by many employers. It's a powerful tool for building a secure financial future. It allows you to contribute a portion of your pre-tax salary to a retirement account. This means that the money you put into your 401k is taken out of your paycheck before taxes are applied, reducing your taxable income. This money grows tax-deferred, meaning you don't pay taxes on it until retirement. Over time, this can result in significant growth due to the power of compound interest. The earlier you start contributing, the more time your money has to grow. One of the biggest advantages of a 401k is the potential for employer matching contributions. Many employers will match a portion of the money you contribute, which is essentially free money added to your retirement savings. For example, if your employer offers a 50% match on contributions up to 6% of your salary, and you contribute 6%, your employer will add an additional 3%. This can significantly boost your retirement savings over time. Traditional 401k contributions reduce your taxable income, lowering your current tax burden. This can be particularly beneficial if you are in a higher tax bracket, as it allows you to save more money now while planning for the future. This makes it a smart way to save for retirement while also saving on taxes today. By taking advantage of the tax benefits and potential employer contributions, you can build a substantial nest egg for your future. Remember, the key to maximizing your 401k is to start early, contribute consistently, and take full advantage of any employer match. Enrolling in your company's 401k plan is typically a straightforward process. It's an essential step towards securing your financial future and ensuring you have a comfortable retirement. Many companies offer a 401k plan as part of their employee benefits package, and taking advantage of this opportunity can provide significant long-term benefits. To get started, contact your HR or benefits department. They are there to assist you and can provide all the necessary information. Whether you prefer to meet in person, over the phone, or via email, they will guide you through the initial steps. They can provide you with the necessary forms and information about your plan's specific details. This includes understanding the different types of 401k plans available, such as traditional or Roth 401k, and the benefits of each. When you enroll, you'll need to choose a contribution amount. This is a critical decision, as it determines how much of your salary will be set aside for your retirement savings. It's important to consider your current financial situation and future needs when making this choice. This is the percentage of your salary that you want to contribute to your 401k account. Many financial advisors recommend contributing at least enough to take full advantage of any employer match, as this is essentially free money added to your retirement savings. You'll also need to choose your investment options. Your 401k plan will offer a variety of investment choices, typically including mutual funds, stocks, and bonds. Each option has its own level of risk and potential return. Your plan will likely offer a range of mutual funds and other investment vehicles. It's important to diversify your investments to spread out risk and increase the potential for growth over time. Consider your risk tolerance and investment goals when making your selections. If you're younger, you might opt for more aggressive investments with higher potential returns. If you're closer to retirement, you might prefer more conservative options to protect your savings. Once you've enrolled and chosen your contribution amount and investment options, your contributions will be automatically deducted from your paycheck and invested in your 401k account. This automated process makes it easy to consistently save for your future without having to think about it each pay period. Over time, these contributions, along with any employer matches and investment gains, can grow into a substantial nest egg for your retirement. Your 401k plan likely offers a menu of investment options to choose from. These options can be overwhelming, but understanding them is crucial for your financial future. These often include mutual funds, which pool money from many investors to buy a diversified portfolio of stocks, bonds, or other assets. Mutual funds are managed by professional fund managers who make investment decisions on behalf of the investors. This can be a great option if you prefer a hands-off approach. Target date funds are a popular choice for 401k investors. These funds are designed to grow assets for a specific time frame, such as your retirement date. They automatically adjust the asset mix to become more conservative as you approach the target date, reducing risk as you near retirement. These funds are designed to automatically adjust your asset allocation as you get closer to retirement. This means that the fund will gradually shift from higher risk investments like stocks to lower risk investments like bonds, aiming to preserve your capital as you near retirement age. It's important to diversify your investments to manage risk. Diversification involves spreading your investments across various asset classes to reduce the impact of any single investment's poor performance on your overall portfolio. Don't put all your eggs in one basket. By diversifying, you can protect yourself from significant losses and increase the potential for returns. Spread your investments across different asset classes, such as stocks and bonds. Stocks offer growth potential, while bonds provide stability and income. Balancing these can help you achieve a more stable and resilient portfolio. If you're unsure about which investments are right for you, consider seeking advice from a financial advisor. They can provide personalized guidance based on your financial situation, goals, and risk tolerance. They can help you create a personalized investment strategy based on your individual goals and risk tolerance. A well-thought-out strategy can make a significant difference in achieving your retirement objectives and ensuring financial security. The IRS sets annual contribution limits for 401k plans. These limits are subject to change each year. For 2023, the contribution limit for individuals under 50 is $22,500. If you're 50 or older, you're eligible to make catch-up contributions. This allows you to contribute an additional amount each year to boost your retirement savings. It's important to stay informed about the current contribution limits to avoid exceeding them. Contributing more than the limit can result in penalties and additional taxes. Maximizing your 401k tax advantages. One of the most significant benefits of a 401k is its tax advantage status. Contributions to a traditional 401k are made with pre-tax dollars. This means you don't pay taxes on those contributions until you withdraw the money in retirement. This tax deferral can significantly reduce your current tax liability and allow your investments to grow tax-free for many years. However, it's important to remember that you will eventually owe taxes on your 401k withdrawals in retirement. Your withdrawals will be taxed as ordinary income. Managing and adjusting your 401k portfolio. Once you've enrolled in your 401k and chosen your investments, it's essential to regularly review and adjust your portfolio. Market conditions and your financial goals can change over time. Your 401k investments should reflect these changes. Rebalance your portfolio periodically to ensure your asset allocation remains aligned with your risk tolerance and time horizon. If you experience any significant life events such as a job change or the birth of a child, review your 401k contributions and investment strategy to ensure they still meet your needs. Beyond the basics, additional 401k considerations. If you leave your job, you have several options for your 401k account. You can leave it with your previous employer, roll it over to an IRA, or cash it out. Understand the potential tax implications of each option before making a decision. If you're facing financial hardship, you may be able to take a loan or withdrawal from your 401k. However, this should be a last resort, as it can significantly impact your retirement savings. Securing your financial future with a solid 401k strategy. A 401k is a powerful tool that can help you achieve your retirement savings goals. By understanding how 401ks work, maximizing your contributions, and making informed investment decisions, you can build a secure financial future for yourself. Remember to regularly review and adjust your 401k portfolio to stay on track with your goals. Consider seeking guidance from a financial advisor if needed. like subscribe for more money moves.